Hey everybody, Steve Ankerstar. Thank you so much for listening in. Welcome to the Ankerstar Wealth Afternoon Show. You know, I tried to get these out in the morning, not happening today or recently, right? Because of all kinds of things, inspection prep, volleyball, compliance conference today. Coming to you live here from the beautiful Omni, Barton Creek, where there's a big compliance conference with Comply Connect, which is one of the firms we use to ensure that we're doing things the correct way in the eyes of FINRA and the SEC, excuse me, for y'all. But so Candace and I are down here, have been for the past 2 days, and tomorrow as well. We're able to work from down here, so it's kind of nice. But yeah, lots been going on. I've got 4 things I want to talk about today, though. Midterm elections are obviously the most important thing for everybody. Still don't have a lot of resolution, but obviously you can see the market is not liking it. Market just closed. I'm sure it's in the red. We'll see how much here in a minute. Disney stock, the layoffs at Meta, and of course Bitcoin is just getting crushed alongside the rest of the crypto universe, because Binance just backed out of that purchase that they were gonna do. So things are in free fall. But hey, before we begin, standard disclaimer applies. This is a financial education presentation. You have to do your own due diligence before you act upon anything you hear today. Again, there's more disclaimer information that is available at ankerstarwealth.com. So first of all, let's talk about the midterm elections. You know, we did expect that there was going to be some form of let me get to the right screen here while I share this out. There was going to be some form of resolution, right, on what exactly we were going to see as far as the, are the Republicans going to take the House? Are they going to take the Senate? Neither, both, that sort of thing. And we're not getting that resolution, at least not yet. It looks like it's going to go off into some runoff situation, so we shall see. But let's get this shared out to you as far as the actual. There we go. As far as the actual article from today, here we go. So again, CNBC.com. Too close to call, right? But what I will tell you is that if you look historically, somebody was talking about this on CNBC earlier today, is that 6 months after every midterm election, the market's been higher than it was at the midterm election. So that's kind of an interesting thing, right? So that's kind of a vote for change, no matter what your political affiliation is, left, right, middle, crazies, either way. It doesn't matter. Change is good in the eyes of the market. And then, of course, 1 year after, it's up, always up a little bit, at least 6 months after, and then a year after, it's generally on. It's always been up, and it's generally been up to the tune of like 20% or so. Don't quote that exact number, but again, somebody was talking about that on CNBC. So pretty interesting, as well as no matter how this turns out, expect that it's going to be positive for the market. So if you kind of rewind to Monday, everybody, not everybody, but the market was up in anticipation of us having all the results. Today was down because we don't have any results, right? And that brings in uncertainty. So boom, here we are, market selling off. I do think, interestingly though, that this is going to set kind of a floor, if you will. There's a lot of things, we're going to know more information, whether you like it or don't. More will be known. That will set a floor. And then we're also going to start getting some inflation numbers tomorrow. Layoffs have begun. We'll talk about that here in a minute. Let's switch to Disney real quick. So here's your Disney headline for the day. Again, losing money in an unbelievable fashion. Kramer earlier was talking about the CEO needs to be fired. The board needs to run him out. I don't know about that. I don't think the particular challenges that a company's going through to be able to make that call. It's not quite as obvious as in sports, when you kind of have all of the information almost at your fingertips. But yeah, I don't know. I think Disney's a long-term winner. Is it too early to buy? I mean, they got hammered today, so we'll see what they ended up down here. Actually, it was down around 6% earlier. It looks like it's up after hours. Wait for that to populate here in a second. So there it was. So 13%. So all the way down to 86. Is that an entry point? What's the best entry point you've had in, really back it up, 5+ years with, other than, if you were a buyer in the midst of COVID, good on you. But other than that, it's been 5 years of a flat line in Disney now. Great American name. You can't not make money running this company, right? Well, you can, because of ESPN, and that's why you have 57 ESPN channels. That it's good for sports. I mean, I love sports. I love that some of the other non-mainstream sports are becoming more mainstream. I'm biased, volleyball. I think that's cool, but I mean, you do have to eventually make some money, right? And it's tough to think how all of that is going to be profitable. So entry point, yeah, the best you've had in years, but not necessarily ready to hop in. I think there's could be some other challenges there, but if you're dying to own Disney, now'd be the time to take a look at it. All right, let's move to what's going on in Meta, the old Facebook. They had their, Zuckerberg did his thing, right? He has earnings, and then he starts talking about Meta, and he's all in, right? He's obviously convinced. He's very eloquent about what he thinks that where this company is going, but he also says it's time to cut. So when you look at major companies that have cut recently, some big names out there are starting to announce some layoffs. I think you'll see more of that. The recession's not here yet, technically, but I think it's coming, especially with the inflation problem and the Fed cure. We're going to see a lot bigger firms go out, and whether it's preemptive, laying folks off, or it's just seeing the writing on the wall. I guess that's the same thing. So I don't know. I think when companies make layoffs, they tend to overdo it, right? You want to overshoot because you don't want to give people a little bad news over time. So don't lay off 2,000 here and then 3,000 next month, right? You overshoot. So I think that's what we're seeing here. 11,000 obviously is a lot of people, 13% of their staff. You're going to see more of that, right? So our full employment number that we've had, that might start to break, right? And if you start seeing that to break, then people are going to be saying, okay, well, now we're actually feeling the recession, and largely that's too across the board. So, my advice, I don't know you specifically, but yeah, I would say now's not the time to start rifling through cash, right? Keep a little bit of cash, cash on hand. So you keep some reserves in case things get ugly. I don't anticipate it getting really ugly, but it will get ugly if it starts getting ugly and you're out of cash. You can be in that, where you have a nice size net worth, but your cash broke, right? And then you're getting in that forced selling situation where now you're having to sell some shares of things that you really just wanted to hold through. So it can kind of change and, affect your game plan. So I would say, start leaning a little more conservative till we get into 2023 is what I'm doing personally with our finances. Just chill a little bit, just make sure it doesn't get ugly. And if it does get ugly, then you're prepared for it. So just my take, you do what's right for you and your family. All right. Last thing I want to talk about, we don't talk a whole lot about crypto. I don't push crypto. If you want to have crypto exposure, have crypto exposure. I say generally Bitcoin and Ethereum. I think there's a place in the world for both of those. If you're looking to buy some, holy cow, is now the time. Right. So again, not pushing it, but I'm saying the sell-off is hard. And right before the this breaking news banner, 8 minutes ago or so, right as I was pulling up the Zoom room, here's the the crypto sell-off, and the banner was the Binance pulled out of their deal. So let's see if they have the actual article up yet, because it literally just happened. But we shall see here. Flip. Okay, maybe it didn't get tacked onto the bottom. There's the crypto sell-off. It's not the Binance one, but yeah, Bitcoin off 9%. Again, this is from November 8th. Well, that's today. This is today's chart. So never mind. I was thinking it was a longer chart, but I mean, selling off hard. It's been hanging around that 20K. It's been going through 20K on both directions for some time now, down to 16K. That's a pretty hard sell off. You can see Ethereum up there drop 12% as well. Is the bottom in? I don't think that. I think you're guessing more than investing in this situation. So when you get out on the risk level, right, when you're off to the far side of the chart where you're like, it could go either way, just manage your position size so you're not financially ruined if you're wrong, right? And the whole thing goes to zero. Now, a couple countries, two now, have adopted as their official currencies. Obviously, the writings on the wall that could lead to failed states and some, which leads to war and, things like that. I'm not making that call. I'm just saying it ups the odds of those sorts of things. So anyhow, don't do that to yourself, right? So if you want exposure, have a little bit and go from there. All right, that's all I have for today's show. Again, thanks for listening in live from Barton Creek. It is beautiful down here. It's my first time down here, so pretty nice to be outside and recording again. The other news, we do have our inspection next week, so I may or may not be doing daily shows until we get through that. Volleyball is concluded for the school year. Lost last night in the third round of the playoffs. Super proud of the team. And again, down here looking at regulatory stuff. So you may see some repapering of some account, just standard compliance stuff as the team and I get smarter as to what we actually exactly how they want it. We know we're doing it right, but then there's how they want it, right? So there we're working through that, trying to make sure we do the things as cleanly and as low drag as possible to be able to meet our compliance, the masters, the powers that be there. So, all right, with that, thanks again for listening in. Do your own due diligence on everything I said, and we will see you back either tomorrow or a Thursday morning. Have a good one. Bye.